Good morning, everybody. It is Friday. It is June the 10th, and this is Mr. Oxy coming at you live from Palm Beach in Florida. Yeah, for this video, I'm going to be Mr. Oxy again because what I want to do is take a look at Oxy and see if this thing still has legs. You know, if you bought into Occidental Petroleum when it was trading at 12 bucks and now it's trading at 60 bucks, you're up, 5x. So you haven't done too badly. But for people who do not have a position in Occidental, or for people who are currently long in Occidental, do you keep it? Do you buy more? Where's it going? Let's take a closer look at Occidental and sort of see if we can figure out what exactly is going on with Occidental Petroleum. So what I've done is I've taken a few minutes and gathered some information from the interweb for all you 3,000 fossil fuel loving energy investors. And let's take a look and a deeper dive into Oxy and see what's going on. So firstly, what we're going to do is take a quick look at 4 of the value stocks in energy that I'm watching right now. So Transglobe, Petrobras, Peabody, and I'm not sure exactly how to say this, but it's like Hoegh, maybe LNG Partners. I'm not familiar with the company. So this is a snapshot of a few stocks that might be worth watching, and I'll tell you why in a minute. And of course, for those of you who've been following me, you know I already have a position in Petrobras, and I predominantly bought it just because of the high dividend. So it's more a parking lot or a savings account for me because of the dividend right now, as opposed to an investment thesis per se. But I am following it. I'm taking a look at where it's going, plus the macro effect of the upcoming elections in Brazil. So there are some macro events that might play into this. So here are 4 stocks that you might want to look at in addition to following Occidental or considering Occidental as a potential investment. These are interesting. Firstly, they have a PE, all of them, of under 10. Generally, we want to be under 15. So from a PE point of view, they're all attractive. I highlighted the 3 at the bottom. So Transglobe, Petrobras, and Hoegh Energy, or however you say that, because they have positive earnings. So I kind of dismissed Peabody here, but that doesn't mean it should be summarily dismissed. I just think the other 3 are more interesting, and of the other 3, right now, Petrobras is certainly the one that is most interesting to me, also with the lowest PE of only 3.18. Now, I'm going to take a look at Occidental, and then just for the sake of being objective, at the end of this video, I'm going to take a quick look at a renewable energy stock that has actually over the past few months outperformed Oxy. So Oxy over the 3-month period, most recent 3-month period, is up about 15% or so. And if we look at Oxy, we can buy into it right now at $65, or otherwise you can just hold it. Right now I'm holding, I'm not buying. If it drops more, I might buy some, or might be tempted to buy some more, but I have a large position in Occidental Petroleum. And right now for me, it's a hold. Towards the bottom left here, you can see it's trading off its high, nearly $10 off the high now of $74, which it hit just a few days ago. The EPS, obviously for the last quarter, was good. The PE ratio is 10.5, so it's dropped quite a bit, despite the fact that the stock price has gone up. And the annual dividend yield is probably not why you would be investing in Occidental Petroleum, because the dividend is relatively small, especially as it relates to its energy peers. The institutional holding is now up to 79% here at the bottom, but you can see the short interest has also gone up a bit. So there have been people banking their investment thesis on the fact that Occidental will be pulling back, and they have been making some money because Occidental has pulled back from 74 bucks to now 64 bucks. And you can see that decline there in the graph on the right-hand side of the page. So let's take a quick look back. Oxy in the last quarter showed us that they had earnings per share of $2.12, which beat the consensus, which was $1.97 by 7.6%. I had expected Oxy to come in at around 225 or so, so I was a little bit over optimistic. So maybe this quarter I'll be a little bit under optimistic and kind of see where we go. Total revenues of 8.5 billion. So this was more or less in line with where I was. I thought the revenues were going to be comfortably over 8 billion, and it was. Of course, it surpassed the consensus estimate as well by about 7%, much like the earnings. And then the year-over-year improvement was due to a rise in contribution from all its segments. Let's take a quick look at those segments. Oil and gas The revenues were up 66%. Chemical revenues is OxyChem up 55%, and midstream and marketing, a bit of the laggard here. Midstream and marketing as a subsector of the energy sector actually has been struggling a bit, and Oxy's midstream and marketing revenues were up only 9% year over year, which is a little bit of an underperformance compared to oil and gas and chemicals. Production and sales, Oxy managed to maintain just over 1 million barrels per day, 1 million barrels of oil equivalent per day, which was within their guidance. And then their sales volume of 1.074 million barrels per day was down 3.5% from what they had recorded in the year ago period. So even though their production was according to guidance or within guidance, the sales volume was actually down a little. Now, Zacks says the decline was due to a drop in US and international sales volumes. That's an interesting way to position it, because it's not due to a drop in international and United States demand. It was a drop overall in international sales volume. It's tough to separate those two, but they are not necessarily the same. The realized prices for the quarter, crude improved, so this is WTI specifically, of 72% to $91.91 per barrel. Why is that important? Well, right now we have WTI trading at about $120 per barrel for the July futures. So the next quarter should be significantly better than the previous quarter, once again, because of realized prices of crude that have improved. Now, this is also an interesting thing because the market doesn't necessarily match the fundamentals of the corporations or issuers of the stock that we are following. So you might be gobsmacked when you look at WTI, for instance, with futures trading at about $122 per barrel, and you see Oxy declining. It doesn't make any sense, but the market doesn't make any sense most of the time, and you cannot base your thesis simply on the price of the commodity. Natural gas liquids improved 70% as well, and natural gas prices increased 55%. This is worldwide, right? So when I say WTI, I shouldn't really, because this would include crude in general, which includes Brent as well. Total expenses were only 5.7. So when you look at the number for total expenses, only up 1.6% year over year. This is a phenomenally good management experience or indicator for us, because the Occidental's management team has done an exceptionally good job managing expenses during what was really a very, very tough time over the past 2 years until the price of the commodity just took off. Oxy generated $3.3 billion in free cash flow and repaid debts with $3.3 billion. Interest expenses are also dropping. This is not material. It's only down $25 million. So if you look at it from a quarter-over-quarter point of view, it's not a material number because it's not very big. But as Oxy eliminates debt, their interest expense also reduces commensurately. Cash and cash equivalents of $1.9 billion, a little bit down from $2.7 billion at the end of the year on December 31st, 2021. Long-term debt down to $25 billion from $29 billion. And the decrease in the debt level was due to effective debt management for sure. We have seen over the past few quarters or so quite a number of different initiatives that Oxy's executive team has undertaken in addition to just simply paying down the debt. Cash flow from operations was 4.1, almost 4.2, up from 2.1 in the prior year period, and the capex only $858 million compared to $579 million invested a year ago. So this is a good number, but at the same time, it's not a good number because there's a general underinvestment in the energy sector right now by most of the major players, including Occidental Petroleum. The guidance for Q2 of 2022, Oxy expects production of approximately 1.130 to 1.160 million barrels per day. So it's kind of in line with where we are today. And then for the fiscal year 2022, for the entire year, more or less the same, but slightly up to 1.14 or 1.17, approximately in that range for the fiscal year. The estimates, though, from the analysts, the consensus estimates have shifted 12.3% due to the changes that I've just shared with you on the previous slides. what are the outlooks? So the estimates, as I said, have been trending upwards. And currently, OXY has a ZAX rank number 3, which is a hold. They expect an inline return from the stock over the next few months. Now, an inline return is kind of like a market-related return for this particular energy stock. So the sort of glory days of buying OXY for $12 and watching it go to $60 or even $70 is largely behind us, because it's highly unlikely. In fact, it's completely improbable that you're going to see a 3x, 4x, 5x from where we are now at around $60, right? So I mean, for a 3x, OXY would have to go to $180 a share. But that's absolutely improbable and highly unlikely to happen in the sort of near to medium term. Maybe long term, if you just kept OXY and socked it away and kept it for the next 20 years or so, that might be true, but it's not going to be true in terms of the near term. So if you're buying OXY expecting a huge return on the stock, I think I agree with the general market consensus that you are more likely to see an inline return from the stock over the next few months, despite the high prices and despite the energy's top performance as the top performing sector in the market overall. What I wanted to do though, and when I started off the presentation, I said, I'll take a look at one renewable player as well. And I mentioned that OXY has been up over the last 3 months or so, approximately 15%. So how about this company for all the guys who are interested in renewables? By the way, I'm not invested in Cactus. I'm just sharing this with you. So Cactus, its ticker symbol is WHD. Over the last month alone has gained about 20%. Now, stocks go up and down, so this doesn't mean anything on its own. But let's take a quick look here at Cactus and see how it compares, because earlier on I said you can buy OXY for about $60, and you can buy Cactus for about $50. So not a lot of difference in terms of your investment, in terms of the number of shares that you could buy based on the share price alone. Cactus is sitting sort of just right of center in its 52-week range, and it had a recent high of $64. It's not a small company, even though it's a small cap company. It's a $4 billion company. It's got positive earnings. Its PE ratio is way too rich for me at 55 times. So that I don't like at all. And too many institutions are invested in here, and you can see the graph that spiked recently when it hit $64, and now it's down to about $52. But I'm sharing this just with you because there are people who are interested in maybe diversifying into renewables as well, instead of just holding fossil fuels. Cactus reported revenues in the most recent quarter of $149 million, so it's significantly smaller than, for instance, Occidental, which is a year-over-year change of 73%. Positive earnings of 30 cents per share, not bad. Expected to post earnings of 38 cents per share for the current quarter, not bad. And the consensus estimate from Zacks has also changed positive, approximately 5%. It's also ranked a hold, so it's a 3. This is Cactus Energy. So basically what I've done here in this particular video is I started off sharing with you 4 energy stocks that you could potentially add to your watch list. One of those, Petrobras, is one where I've already initiated a position, and I've actually been building that position as it's been pulling back. Lo and behold, as the prices of WTI and Brent have been increasing and just like going off the charts over $120 per barrel, many of the energy stocks, including Occidental and Petrobras and some of the other energy stocks that I hold, have actually been pulling back. So at the start of the video, I showed you a few that are on my watch list. We talked a little bit about Occidental. For me, Occidental right now is a hold. If it does pull back sharply, I might add to my existing position. I certainly wouldn't sell any right now. I mean, the gains based on my cost basis are off the charts. And just for the sake of being completely objective, I even shared Cactus, which is a renewable energy company for people who would like to take a look at one of those. So guys, that's sort of a mouthful for this particular video. 4 to watch, 1 that we're invested in, Occidental Petroleum, and 1 renewable. So that's 6 stocks overall in one video. It's a mouthful. Let me know what you think in the comments. I look forward to your comments, and I look forward to interacting with you later. Bye-bye.